The Bitcoin halving is days away, and Will Foxley from the Mining Pod is joining me to answer some of your social media questions. Will, thank you so much for doing this for us.
Of course, a podcast with a podcaster. Let's hit these topics.
Podcast with a podcast. It's a podcastception. All right. First
Mhm.
question. Thoughts on JP Morgan's stance that the halving is priced in?
I think so. I mean, I think we look at like the history of Bitcoin halvings. They've typically led to an increase in price about 6 to 9 months after the Bitcoin halving. Like Bitcoin price has gone up, but that doesn't mean that like the halving is the cause of that. Now, I do think like we're going to see a dramatic drop in the amount of Bitcoin produced, all those sort of things, and that's going to be good for supply and flows to like different ETFs or buyers. But I think generally, like we've known the halving schedule for quite a while. People have been like preparing for it for quite a bit. So I can't really say that it has not been priced in. It feels like it's people have known about it.
Yeah, I feel like that's the general sentiment. All right, let's move on to the second question from our social media channels. Will the hash rate decrease after the halving? And if so, how much?
Definitely going to decrease a little bit. I'd say about 10%. We'll see if that number is right or not. I think a lot of people are mining into the halving, trying to juice those rewards. People are probably even turning on older machines. But once that halving happens, you'll see a lot of older machines, machines that aren't as efficient, turn off until price comes back up. Or even people who have bad electrical contracts and aren't able to pay or mine profitably will turn off. I do think, though, that with Bitcoin price being so high and probably more of like a bullish year, that we'll see a lot of this hash rate turn back on, and probably the lowest amount of hash rate will turn off in terms of Bitcoin halvings historically.
Third question now. Do you think this year's halving will have the biggest impact since institutions are now trading Bitcoin?
I think compared to previous halvings, probably. I mean, if we go back to the 2021, there wasn't like a ton of eyes on Bitcoin at the time. Bitcoin was trading around $6,000 to $7,000 at the moment. COVID had just started, and so a lot of people were focused on that. There wasn't too much attention, and the previous ones are almost ancient history to most Bitcoiners. Like people weren't really around in 2016 or 2012, so those were sort of like certainly large events for Bitcoiners, but not in terms of uh, other market participants. Now with ETFs going live and all these ETFs like eating up Bitcoin every day, less Bitcoin in the market from these miners certainly means that there's going to be like more price pressure because there's less supply. So I think over time we'll look at this as more of a one of the most important moments for Bitcoin, maybe like the last 90 to 180 days. ETFs going live to Bitcoin halving being pretty important in Bitcoin's price history.
Okay, and this is the last one, and it's a long one. What happens when all the halvings happens? I think they mean when all the halvings happen. Bitcoin relies on transaction fees for security. I know it's a ways away, but it's also not that far away in the grand scheme of things. Only some generations. So I guess the question there is, what happens when the halvings happen? All of them.
Yeah, I mean, you're making me pull out my Bitcoin history book and remember what it says in there. I think for the most part, halvings will just keep happening until they stop completely. I think the year 2140 is when we see like the end of the block subsidy. Halving just keeps going down until like there's not any more Bitcoin to issue, and then we do move to a security budget based completely on transaction fees. So while that is 100 plus years away in terms of like a currency's history, that's not that far away. I think a lot of people are concerned about that. I know from talking from Bitcoin miners who are staking, their entire businesses on this roadmap working, they're really pushing transaction fees through different mediums, whether that be L2s, different multi-sig schemes, different applications on top of Bitcoin to be able to prevent anything from happening to Bitcoin in the near future. So I think miners, for the most part, are bullish different applications on Bitcoin in order to prevent the halvings from whittling away their revenue.